Chapter 1. Welcome to the Wyckoff Mindset. Listen for 10 minutes and stop letting fear and impulsive decisions control your trading forever. Ever lost a trade and asked yourself, how did I screw that up again? If you're smart, you shouldn't even be here. Yet, here you are. Let's fix that. In the next 10 minutes, you will learn the emotional trigger that's ruining your trades, and how the Wyckoff Mindset can give you control over your fear, your impulses, and your results. Comment below. When was the last trade you made because you had to be right? Think about that for a moment. Really picture it. That feeling in your gut, that tightness in your chest, that urge to push through even when the market screamed, "Stop." That, my friend, is the exact spot where most traders lose their edge. And that's exactly why the Wyckoff Mindset matters. Richard D. Wyckoff was a man who studied the market like a detective studies a crime scene. He didn't follow rumors, he didn't chase hype. He observed patterns, understood the psychology behind every push and pull, and he taught generations of traders that the first battle isn't out there in the charts. It's inside your own mind. Let me be clear. This audiobook isn't just theory. This isn't some surface-level, think positive and trade well nonsense. We're going deep into your instincts, your habits, your emotional triggers, and the subtle mental mistakes that quietly bleed your account dry. Wyckoff knew something that most traders forget. Markets aren't unpredictable chaos. They're reflections of human emotion, fear, greed, hope, and regret. And the traders who succeed, they don't try to fight the market. They learn to read it. They master themselves first, then the market second. I promise you this, by the end of this audiobook, you'll have a toolkit to pause, think, and act with clarity. You'll see fear not as your enemy, but as a signal. You'll understand why sticking to discipline beats chasing every shiny trade. And most importantly, you'll start trading from a place of control instead of reaction. Let's be honest. Most traders jump in thinking the next trade will fix their last loss, or worse, they believe the market owes them a win. Maybe you've been there. Maybe you felt that pinch, that frustration, that gnawing doubt that keeps you staring at charts at 2 a.m. Here's the truth. You're not broken. You're not unlucky. You've just been missing the mindset part of trading, and that's okay. You're about to catch up faster than you ever imagined. Think of it like this. Wyckoff spent his life mapping the market's pulse. He saw the big players, the smart money, moving quietly while most traders panicked. And he noticed a pattern. Those who controlled their emotions, who understood human behavior, made consistent profits. Those who didn't, well, they repeated the same mistakes over and over. Let me share a quick story. Jesse Livermore, one of the greatest traders in history, once lost everything twice because he let his emotions run the show. But the third time, he studied the market, studied himself, and he started trading like a surgeon, precise, disciplined, unemotional. That's the essence of the Wyckoff Mindset. Now, I want you to ask yourself, are you ready to trade like Livermore in his prime? Are you ready to see the market as a puzzle, not a gamble? If your answer is yes, then you're in the right place. Over the next 10 minutes, I'll guide you to recognize the mental traps that sabotage your trades. Understand why fear, greed, and pride are silently dictating your moves. Begin building the habits that turn hesitation into confidence. Here's a little secret most traders never realize. Emotional mastery isn't about suppressing your feelings. It's about understanding them. Every reaction in the market tells you something if you're willing to listen. And listening, That's where the Wyckoff Mindset starts. Take a deep breath with me. Imagine the market as a calm river. Right now, it might feel chaotic, but chaos is just opportunity wrapped in fear. And opportunity rewards the calm, the disciplined, and the observant. By the end of this chapter, I want you to walk away with a simple but powerful thought. You can control your mind. You can control your trades. And you can start seeing the market not as a monster waiting to eat you alive, but as a system you can learn, understand, and even anticipate. So, get ready. You're about to step onto the path that separates casual traders from true masters. The path where fear doesn't run you, where mistakes become lessons, and where discipline isn't a burden, it's your greatest weapon. And as we move into the next chapter, we're going to dive into the real battlefield, your own mind. That's where the war is fought. That's where the victories are earned. And that's where you'll begin to truly understand what it means to master yourself before you try to master the market. By the time we finish Chapter 2, you'll know exactly how emotions silently steal your edge and how to stop letting them. Listen for 10 minutes, and you'll start spotting the mental traps that silently sabotage every trade you make. Ever sat in front of your screen and realized, too late, that you were trading your emotions instead of the market? Yeah, we've all been there. If you're smart, you shouldn't be here. Yet, here you are. Let's fix that. Comment below. When was the last trade you made because you had to be right? Think about it. The exact trade that kept you awake at night. The one where logic left the room and emotion took the wheel. Here's the deal. Trading isn't just about charts, patterns, or indicators. It's about what's going on in here, the mind. Right here inside you. The inner battlefield of a trader is a place most people never talk about. Fear, greed, doubt. These aren't just words. They're invisible forces that push you to hit buy when you should wait, or hold when you should exit. I want you to imagine this for a second. You're in the middle of a fast-moving market. The price spikes. Your heart races. That gut punch of anxiety hits you. You feel that urge to act now before you miss out. And in that instant, the calm, calculated trader disappears. What's left? Reaction, panic, impulse. That's the battlefield. And most traders, they lose there before they even place a single order. But here's the kicker. Understanding this battlefield is half the battle. Fear and greed aren't your enemies. They're signals. They're the market whispering, "Pay attention, or you'll regret this." Let me share a story. Paul Tudor Jones, one of the greatest traders alive, once said that his edge wasn't in his strategies or his numbers. It was in his ability to control his mind. When the market panicked, he didn't. He observed. He listened. He knew that a trader who can stay calm in chaos is worth 10 who can't. Greed is sneaky. It whispers, "This trade could make you rich if you just push a little harder." Fear is louder. It shouts, "Get out before it's too late." And doubt creeps in between, quietly saying, "Maybe you don't know what you're doing." And guess what? Most traders let these three run the show. So how do you fight back? How do you win the war that's raging inside your own head every single day? You do one thing first. You master the mind before you try to master the market. Here's a simple truth. The charts don't care if you're scared or overconfident. The market doesn't reward emotion, it rewards clarity, patience, and discipline. That's why understanding your own psychology isn't optional.
It's the foundation of every successful trade. Let's make this real. Imagine you've been watching a stock all day. It's been climbing steadily, then suddenly drops 20 points in an hour. Your brain screams, "Sell now! You're losing money!" But the Wyckoff mindset, or any top trader's mindset, pauses, observes, asks questions. Why is it dropping? Who's moving the market? What's the bigger picture? See the difference? One trader reacts. One trader responds. The difference between reaction and response is the line between losses and consistent wins. I want you to think about your last 3 trades. Were you reacting or responding? Be honest. This reflection is gold. Most traders never do it, and that's why they repeat mistakes. Here's a mental exercise I want you to try. Before you place your next trade, take a deep breath. Step back from the charts. Ask yourself, am I trading this because of fear, because of greed, or because I've actually seen a high probability setup? That split second of awareness can save more money than any indicator ever could. Remember Jesse Livermore? He made and lost millions multiple times because he initially ignored his emotions. But the genius came when he started observing himself as closely as he observed the market. He understood his own impulses, his triggers, and learned to wait. Not just for market setups, but for the right mental state before taking action. This chapter isn't just about theory. It's about building awareness. Awareness of your triggers, your blind spots, your tendencies to overtrade or revenge trade. And once you see them, once you understand them, you can start rewiring your behavior. Think about it. Every successful trader you admire has mastered this battlefield first. The money comes second. First, you master yourself. Then the market bends to your understanding. So here's your takeaway for the next trade you make. Fear, greed, and doubt are unavoidable, but letting them control your decisions, that's optional. Observation, patience, and self-awareness are the real weapons. They turn the battlefield inside your mind from a chaotic mess into a command center of calm, deliberate action. By the time we move into the next chapter, you're going to start learning how to read the market like Wyckoff himself. You'll see how he identified trends without letting emotion drive his trades. You'll discover that the charts are really just reflections of human behavior, and that behavior can be understood, predicted, and even anticipated. So take a deep breath, steel your mind, and get ready. The real journey begins when you start mastering the battlefield inside you. And trust me, once you do, the market won't seem quite as intimidating. If you want, I can write Chapter 3 next, complete with cinematic narration, storytelling, and real-life trader examples, keeping the seamless flow from Chapter 2. This one will dive into Wyckoff's principles and practical market observation strategies.
Listen for the next 10 minutes, and you'll start seeing the market the way the pros do. You'll stop reacting to every spike and drop and start reading the signs the market is giving you. Ever lost a trade and ask yourself, why didn't I see that coming? Yeah, that's about to change. If you're smart, you shouldn't be here, yet here you are. Let's fix that. Comment below. When was the last trade you made because you had to be right? Think about it. The charts don't lie, but your emotions sure do. Here's the deal. Richard Wyckoff, one of the greatest market minds in history, had a simple idea. Markets move in phases, and those phases are dictated by human behavior. Accumulation, distribution, markup, markdown. These aren't just fancy words. They're the heartbeat of the market, the rhythm behind every chart you see. Most traders jump in blind. chasing price moves, guessing, hoping, praying. But Wyckoff taught that you don't need luck. You need observation, you need patience, and you need to understand what the smart money is doing behind the scenes. Let me break it down. Accumulation happens when big players quietly buy, building positions without causing panic. Distribution is when they sell off slowly, again without alerting the crowd. And those big moves in between, mark up, mark down, are the markets reacting once the groundwork is laid. Here's the key takeaway. If you can recognize these phases, you can position yourself to ride trends instead of getting crushed by them. Most traders miss this because they let emotion decide when to enter and exit. Think about Jesse Livermore. He didn't just guess trends. He watched them. He observed price action, volume, and behavior. He learned to read the market's body language like a seasoned poker player reads his opponents. And he didn't act until he had clarity. That's why he could catch massive moves while others panicked or chased. Now, I want you to imagine your screen as a stage. Every candle, every tick, every shift in volume is an actor performing a story. Wyckoff and Livermore were just really good at reading the script. They weren't reacting, they were interpreting. Let me ask you something. How many times have you jumped in a trade thinking it was a breakout only to see it reverse? That frustration, that gut punch, is usually because you were trading price, not understanding why the price was moving. Here's a simple mental exercise. Before your next trade, step back and ask, who's in control here, the big players or me? And how do I know? That's the difference between reactive trading and strategic trading. Wyckoff's methods are all about patience, waiting for the right setup, observing quietly. Not every day has opportunity, and not every setup is yours to take. Most traders feel pressure to act constantly, but the pros, they wait, they watch, they let emotion cool off before committing capital. Here's a real-world nugget. Richard Livermore once observed a stock moving sideways for weeks. Most traders ignored it, but he noticed the accumulation pattern. He waited until the breakout phase began and entered with precision. That single trade made him more than some traders made in years. And it wasn't luck, it was psychology and observation. And this is where your mindset comes in. You have to treat the market like a detective treats a crime scene. Look for clues, understand human behavior, and above all, keep your emotions out of it. Fear, greed, excitement, those are distractions. Observation and patience are your true tools. Ask yourself, are you acting on impulses or are you reading the market's story? Most traders answer this honestly only after the fact, but you don't have to learn the hard way. You can start reading the signals now, understanding what's really happening behind the charts and making moves with intention. Now, a little secret. Understanding these phases isn't just about money. It's about freedom. The freedom to step back, breathe, and act with confidence. Because once you know what the market is doing and why, you're no longer a passenger, you're in control. By the end of this chapter, I want you to walk away with one thing. The market is a story. Every trend, every spike, every dip is written by human behavior. Learn to read it, and you'll start trading from insight instead of impulse. And as we move into the next chapter, we're going to talk about something even more powerful. Discipline over desire. How sticking to rules and routines can protect your capital, your mind, and your sanity. Most traders fail because they chase excitement. You're about to learn how to trade calmly, confidently, and consistently. Get ready. The lessons from Wyckoff aren't just about charts. They're about transforming how you act, think, and feel in every trade you take. Chapter 4. Discipline over desire. Listen for the next 10 minutes, and you'll start understanding why discipline beats desire every single time in trading. Ever made a trade just because it felt right and ended up wiping out profits you'd earned over weeks? Yeah, we've all been there. If you're smart, you shouldn't be here. Yet, here you are. Let's fix that. Comment below.
When was the last trade you made because you had to be right instead of following a plan? Think about it. That tight feeling in your gut, that instant urge to act, recognize it. That's desire, and it's the sneakiest enemy of every trader. Here's the truth. Markets reward routine, not impulses. They reward preparation, not hope, and they reward discipline, not excitement. Yet most traders spend their careers chasing the next thrill, ignoring rules and acting on whims, and it kills them. Let me tell you a story. Richard Dennis, the famous turtle trader, taught a group of students to follow strict rules. He told them, stick to the plan. Don't chase trades. Don't trade on hunches. Some followed the rules, some didn't. Guess what happened? The ones who followed the rules made consistent gains. The ones who didn't, they lost everything. Routine, patience, and discipline, they're invisible superpowers in trading. Think about it like this. Desire is loud. It screams, go now, don't wait, don't miss out. Discipline is quiet. It says, check your plan, confirm your setup, trade only when the conditions are right. Most traders hear the scream and ignore the whisper, and that's the difference between success and disaster. Now, let's be real. Discipline isn't some boring rule book. It's a form of freedom. The freedom to trade without panic, the freedom to protect your capital, and the freedom to sleep at night knowing you're not gambling. Here's a real-life example. Many traders in the 1929 crash saw the market dropping and tried to time the bottom impulsively. They ignored their strategies, chasing a feeling, and lost fortunes. Meanwhile, traders who stuck to their rules, who waited for confirmations, survived. They lived to trade another day. And that's the lesson. The market will always be there. Your edge comes from consistency, not luck. So how do you build this kind of discipline? Step 1, write down your rules. When to enter, when to exit, how much risk to take. Step 2, follow them religiously. No excuses. Step 3, review every trade, successes and failures alike. Ask yourself, did I follow my rules or did desire drive me? Here's a tip. Make routines that reinforce discipline. Journaling trades, setting alerts, pre-trade rituals, even something as simple as a deep breath before entering a trade, anchors you in calm, deliberate action. Over time, your subconscious starts to follow the system automatically. Desire loses its power. And here's a little mental trick the pros use. Whenever you feel that rush to act impulsively, ask yourself, am I trading the setup or am I chasing a feeling? That one question can save you more money than any indicator ever could. Remember Jesse Livermore? He made millions not because he was lucky, but because he waited. He had a routine. He studied trends, observed the market, and only acted when the odds were in his favor. Impulsivity never won him a fortune. Discipline did. So let's think about your own habits. Are you trading the system or trading the hype? Are you letting your gut feelings override your plan? Most traders think discipline is restrictive, but it's actually liberating. It keeps your mind clear, your capital safe, and your performance consistent. By the end of this chapter, I want you to walk away with this thought. Discipline is your shield. Desire is your trap. The more you follow your rules, the less you'll be tempted to chase losses, fear spikes, or fall for market noise. This is how long-term traders survive and thrive. And as we move into the next chapter, we're going to talk about something every trader faces, but few embrace. Fear. Not as a roadblock, but as a guide. We'll explore how to turn fear into insight, how to read its signals, and how traders like Paul Tudor Jones have turned panic into opportunity. So take a breath, steady your mind, and get ready. Discipline isn't flashy, but it's the engine that powers every consistent trader's success. The next step? Learning to see fear for what it really is and how it can make you sharper, smarter, and more profitable.
Chapter 5. Fear is a teacher. Listen for the next 10 minutes, and you'll start seeing fear not as an enemy, but as a guide. You'll learn how to turn that gut-tightening panic into a signal that makes you smarter and sharper in the market. Ever lost a trade and asked yourself, why did I let fear control me again? Yeah, we've all been there. If you're smart, you shouldn't be here. Yet, here you are. Let's fix that. Comment below. When was the last trade you made because you had to be right and fear pushed you off your plan? Think about that moment. The racing heartbeat, the sweaty palms, that inner voice screaming, "Get out now." That's fear. And that's exactly what we're about to master. Here's the deal. Fear is unavoidable in trading. It's human. But the pros, they don't fight it. They listen to it. They treat it like a signal instead of a stop sign. Every spike of fear, every twinge of doubt is telling you something. The key is learning to interpret it, not to react to it. Let me tell you about Paul Tudor Jones. During the 1987 market crash, fear was everywhere. Traders were panicking, selling in chaos, losing millions. Jones, he didn't freeze. He didn't panic. He watched. He read the signals of fear in the market and turned them into opportunity. Where others saw disaster, he saw patterns, he saw entries, he saw chance. And in that crash, he not only survived, he thrived. Fear became his teacher, not his executioner. Think about that for a second. The exact same event caused some traders to lose everything, while one trader used it to multiply his edge. What made the difference? Interpretation, patience, emotional control. Here's something most traders don't realize. Fear isn't the problem. Your reaction to fear is. That instant urge to sell, to chase, to overreact, that's the trap. But fear itself, it's just information. It's a spotlight pointing to where you need to pay attention, where risk is highest, where opportunity might lie. Let's break it down. Next time you feel that tightening in your chest before a trade, ask yourself, what is this fear trying to tell me? Am I ignoring the signal, or am I overreacting to it? That one question can transform panic into insight. Here's a story for perspective. Many traders in history froze during Black Monday in 1987. The market dropped like a stone. People were screaming, "Sell, sell, sell." Paul Tudor Jones felt fear too, but he used it differently. He looked for confirmation, observed behavior, and positioned himself carefully. That calm, analytical response turned fear into his secret weapon. You see, fear tests you. It exposes weaknesses. It reveals when you're impulsive, undisciplined, or unprepared. And the traders who fail, they ignore the lesson. They react. They overtrade, they panic, and the money leaves the account faster than they can blink. Here's a tip. Start journaling your fear. Before you act on a trade, note how you feel. Was it excitement, greed, or fear? Then after the trade, review it. This simple habit builds awareness and transforms fear into a teacher instead of a tyrant. Ask yourself, are you letting fear dictate your actions, or are you letting them inform them? Most traders answer this honestly only after they've lost money, but you don't have to wait. You can start now. Remember, every great trader has faced fear head-on. Livermore, Jones, Wyckoff, all of them. And the ones who thrived didn't eliminate fear. They learned from it. They observed. They waited. They acted deliberately. That's the difference between amateurs and pros. By the end of this chapter, I want you to walk away with one thought. Fear is not a roadblock. It's a guide. The next time it hits, don't run. Observe. Analyze. Let it teach you something. That's how you turn what terrifies most traders into the very edge that sets you apart. And as we move into the next chapter, we're going to tackle something equally tricky: greed, patience, and timing.
We'll see how balancing the urge for fast profits with disciplined execution creates consistency and control, and how Wyckoff's legendary patience during accumulation phases can teach you to wait for the market to work in your favor. So take a deep breath, let fear teach you, and get ready to learn how to combine patience and timing with discipline to become the kind of trader that doesn't just survive, but thrives.
Chapter 6. Greed, Patience, and Timing. Listen for the next 10 minutes, and you'll start learning how to balance the urge for fast profits with disciplined execution. Ever jumped on a trade too soon and watched it reverse before you could blink? Yeah, we've all been there. If you were smart, you shouldn't be here. Yet, here you are. Let's fix that. Comment below. When was the last trade you made because you had to be right and ended up missing the bigger move? Think about it. That gnawing frustration, that feeling of regret, that's impatience talking. Here's the truth. The market doesn't reward speed, it rewards timing. You can be the fastest trader on the planet, but if you're out of sync with the market, you'll get burned every time. And greed? Don't get me started. Greed is the sneaky little devil that convinces you to risk more than you should, chase every spike, and forget your plan. Let me tell you a story. Richard Wyckoff, the trading legend, was famous for his patience. During accumulation phases, he would watch stocks move sideways for weeks, sometimes months. Most traders would get itchy, thinking, "Why isn't it moving? I need action." But Wyckoff knew the smart money was quietly building positions. He waited. He observed. And when the move finally came, he entered with precision while everyone else was chasing the tail end. That's the key. Patience plus timing equals market control. Not luck, not guesswork, control. Think about Jesse Livermore. One of his most famous trades involved watching a stock consolidate for days. He didn't chase it. He didn't force it. He waited for the breakout with a plan in hand. When it happened, he rode the trend confidently, while the impatient traders had already blown their chances or their accounts. Here's the catch. Greed makes you overtrade. Impatience makes you jump in too early. Fear makes you exit too soon. But patience, it's quiet. It's steady. It whispers, wait for the setup. Wait for confirmation. Wait for the right moment. And in trading, waiting isn't weakness, it's strength. Here's a mental trick the pros use. Before entering a trade, ask yourself, am I acting because of opportunity or because of desire? Desire will push you to act early, take shortcuts, and chase the wrong moves. Opportunity? That's patience aligned with timing. Another real-world example. During the 1920s bull markets, many traders jumped into hot stocks without understanding the phases. They chased price, got caught in distribution phases, and watched profits evaporate. Wyckoff, on the other hand, studied the patterns, waited for accumulation, and executed with precision. Timing was everything. Ask yourself, are you trading based on the chart or based on your feelings? Are you chasing the thrill or are you waiting for the signal? Most traders answer honestly only after they've lost money, but you don't have to. You can start now. Here's the golden rule. Fast profits are tempting, but consistency wins. Patience preserves capital. Timing maximizes gains. When you combine all three, you're not gambling, you're executing strategy. You're trading like a pro. Let me give you a simple exercise. Before your next trade, watch the price movement without entering. Observe volume, patterns, and market behavior. Ask yourself, is this accumulation, distribution, or a breakout? Wait for the moment when risk is lowest and reward potential is highest. That's how legends like Wyckoff and Livermore moved through markets. And remember this, the market doesn't owe you anything. It doesn't reward desperation or impulsivity. It rewards discipline, patience, and timing.
Master these three, and suddenly trades that used to feel chaotic start to feel predictable. By the end of this chapter, I want you to walk away with one thing. Timing beats speed. Patience beats impulse. Greed kills. Balance these forces, and you'll find control in a market that seems wild to most traders. And as we move into the next chapter, we're going to tackle emotional resilience in volatility. How to stay calm when the market throws sudden swings at you. How to use meditation, visualization, and journaling to maintain clarity. And how traders preserved capital by sticking to mental frameworks when others panicked. So, take a deep breath, anchor yourself, and get ready to learn how to stay steady when the storm hits. Timing and patience have brought you this far, but emotional resilience is what keeps you in the game for the long haul.
Chapter 7. Emotional Resilience in Volatility. Listen for the next 10 minutes and you'll discover how to stay calm when the market throws sudden swings at you. You'll learn techniques that protect your capital, your mind, and your confidence, no matter how wild the charts get. Ever lost a trade because the price spiked or plunged before you could react? Yeah, that sting is all too familiar. If you're smart, you shouldn't be here. Yet, here you are. Let's fix that. Comment below. When was the last trade you made because you had to be right and ended up panicking instead? Take a moment to recall that feeling. Tight chest, racing heart, that instant urge to hit sell before thinking. That's volatility testing you. And that's exactly what we're going to master. Here's the deal. Volatility isn't the enemy. It's part of the game. The real challenge is maintaining emotional resilience. The market will swing. Prices will gap. News will shock. But your edge comes from how you react or don't react to the chaos. Let me tell you a story. During the 2008 financial crisis, some traders saw their accounts evaporate overnight. Panic was everywhere. Yet a handful preserved their capital. Why? Because they had mental frameworks, predefined rules, journaling habits, visualization routines. They didn't act on impulse, they followed structure. They stayed calm when others were screaming. That's emotional resilience in action. So how do you build it? First, meditation. Just 5 minutes a day can center your mind. Breathe. Observe your thoughts without judgment. This quiet practice helps you respond to market swings with clarity instead of reacting to fear. Second, visualization. Before the market opens, imagine different scenarios. Sharp spikes, sudden drops, trend reversals. Picture yourself staying calm, executing trades according to your plan. Your mind starts to expect volatility, and when it comes, you're ready. Third, journaling. Every trade, every feeling, every decision, write it down. Analyze your wins and losses. Awareness is the ultimate tool for emotional control. Most traders skip this step and wonder why panic controls them. Journaling trains your brain to recognize emotional triggers before they sabotage your trades. Let's look at a real example. George Soros during the 1992 Black Wednesday crash. While most were frozen in fear, he stuck to his framework, trusted his analysis, and executed with calm precision. He didn't let volatility dictate his actions, he let his rules and preparation guide him. That's the difference between survival and disaster. Ask yourself, are you reacting to volatility or are you observing it? Are you letting emotion control your trades or are you letting discipline and preparation lead the way? Most traders answer honestly only after they've lost money. But you don't have to wait. You can start building resilience now. Here's a mental trick. When the market spikes against your position, take a slow breath and ask, is this my plan telling me to act or is this my fear talking? That small habit separates the pros from the amateurs. Remember, emotional resilience isn't about eliminating stress. It's about managing it. It's about expecting chaos and staying anchored. Meditation, visualization, and journaling aren't just self-help fluff. They're the tools that turn panic into calm, impulsivity into strategy, and volatility into opportunity. By the end of this chapter, I want you to walk away with this thought. The market will always test your mind.
Your profits aren't determined by luck. They're determined by your ability to stay steady when others lose their cool. Resilience is the secret weapon of every top trader. And as we move into the next chapter, we'll dive into the mindset of a true market winner. You'll learn how top traders think differently, focusing on probabilities instead of certainty, cultivating confidence without arrogance, and rewiring your mindset from reactive to proactive. That's where emotional resilience meets strategic mastery. So take a deep breath, center yourself, and get ready to train your mind to think like a market winner, not a market victim.
Chapter 8. The Mindset of a Market Winner. Listen for the next 10 minutes and you'll start thinking like a market winner. You'll discover how top traders focus on probabilities instead of certainty, cultivate confidence without arrogance, and rewire their mindset from reactive to proactive. Ever lost a trade and ask yourself, why did I make the same mistake again? Yeah, that frustration is about to turn into clarity. If you're smart, you shouldn't be here, yet here you are. Let's fix that. Comment below. When was the last trade you made because you had to be right, not because the setup made sense? Think about that moment, that need to prove yourself, that inner voice saying, I can't let this one slip. That's reactive thinking, and it's the killer of profits. Here's the deal. The mindset of a market winner is different from the mindset of a typical trader. Winners don't chase certainty. They understand probabilities. They know that no trade is guaranteed, no market move is absolute. What they do control is their preparation, their execution, and their reaction to outcomes. Let me tell you a story. Jesse Livermore, one of the most legendary traders of all time, rarely acted without considering probabilities. He would wait, observe, and calculate. He didn't need to be right on every trade. He just needed the odds to be stacked in his favor, and then he acted with confidence. That's the mental difference between a winner and a gambler. Confidence without arrogance is the next piece of the puzzle. Too many traders confuse boldness with recklessness. A market winner knows the edge is in preparation and patience, not ego. You don't need to force trades. You don't need to prove anything to anyone. You need to execute your plan consistently and calmly. Here's a practical exercise. Before entering any trade, ask yourself, am I acting because I see an edge or because I feel pressure to be right? That split second of awareness rewires your mindset. It turns reactive impulses into proactive decisions. Let's take another example. Paul Tudor Jones. He doesn't gamble on the market. He assesses risk, calculates probabilities, and waits for setups where the odds are in his favor. That's why he can survive volatility and even thrive during crises. He treats the market like a chessboard, not a slot machine. The third step is rewiring your mindset from reactive to proactive. Reactive traders respond to price movements. They're chasing, panicking, and reacting to every tick. Proactive traders anticipate, prepare, and follow a plan. They know their emotional triggers, and they have systems in place to prevent mistakes. Here's a mental framework you can start using today. Step 1. Identify your common emotional triggers. Is it fear, greed, FOMO? Step 2. Create a plan to neutralize them. Predefine entry and exit points. Set stop losses. Use checklists. Step 3. Practice mindfulness during trades. Notice impulses, but don't act on them. Let the plan guide your execution. Ask yourself, are you trading the setup or are you trading your emotions? Most traders answer honestly only after they've blown an account. You don't have to wait that long. Start rewiring your mind now. Remember, probabilities are your friend. Certainty is a myth. Market winners focus on the process, not the outcome of each individual trade. They trust their preparation, stay disciplined, and let the results follow naturally. By the end of this chapter, I want you to walk away with this thought. Your mind is the ultimate trading tool. When you shift from reactive to proactive, from needing to be right to focusing on probabilities, you gain control. Control over your trades, control over your emotions,
control over your financial future. And as we move into the next chapter, we're going to take all this theory and turn it into action. You'll learn how to apply these psychological principles in real trades, how to build a personal trading plan anchored in emotional control, and how disciplined application of Wyckoff principles multiplies success. So take a deep breath, anchor your mindset, and get ready to move from thinking like a market winner to trading like one. The next chapter is where the rubber meets the road.
Chapter 9. From Theory to Action. Listen to the next 10 minutes and you'll discover how to turn all the psychology, discipline, and mindset strategies we've discussed into real trades that actually work. Ever lost money despite knowing better because your plan didn't survive real market conditions? Yeah, we've all been there. If you're smart, you shouldn't be here. Yet here you are. Let's fix that. Comment below, when was the last trade you made because you had to be right, not because the setup was sound? Think about that. That rush to act, the gut feeling overriding your plan, that's the exact trap we're about to neutralize. Here's the deal. Knowledge alone doesn't make you a trader. Execution does. Your edge comes from applying psychological principles consistently, not from reading about them or watching charts in a vacuum. The gap between theory and action is where most traders fail, but it's also where you can separate yourself from the crowd. Let's start with building a personal trading plan. Your plan isn't just a list of rules, it's your mental shield. It tells you when to enter, when to exit, how much risk to take, and how to respond to volatility. It anchors you to logic when emotions scream. Here's a mini case study. Take Wyckoff's principles. A disciplined trader noticed a stock in accumulation for weeks. Instead of chasing spikes or panicking during dips, they followed their plan. Entry at confirmation, position sizing according to risk, and a clear exit strategy. When the stock finally broke out, the reward was magnified not because of luck, but because preparation and discipline met opportunity. That's the power of turning theory into action. Now let's talk mental cues. Each trade should start with awareness. Ask yourself, am I trading the setup or my emotions? Review your rules, check your triggers, and commit to your plan. This simple habit prevents impulse trades that destroy accounts. And remember, journaling isn't just for reflection, it's a strategic tool. Every trade, every emotional reaction, every deviation from your plan should be recorded. Over time, patterns emerge. You'll see where fear, greed, or impatience hit hardest, and you can fix them before they cost you again. Here's a real-life example. George Soros didn't rely on intuition alone. He had frameworks, contingency plans, and mental checks that allowed him to act decisively during market swings. Preparation and psychology, combined with execution, made him legendary. Ask yourself, do you have a framework like this? Are you winging it and hoping for the best? Most traders gamble, thinking experience alone will save them. But true traders execute strategies with discipline, emotional control, and awareness. That's how Wyckoff, Livermore, and Tudor Jones turn theory into action. Step 1, define your edge. Step 2, build rules around it. Step 3, execute every trade according to your plan without exception. Step 4, review and refine. That cycle, repeated consistently, transforms a trader from reactive to proactive. Here's the secret. The market doesn't care about your feelings. It doesn't reward impulse or arrogance. It rewards preparation, discipline, and execution. When you bring theory into action, you align yourself with probability, not chance. By the end of this chapter, I want you to walk away with this thought. Knowledge without action is wasted potential. The mental frameworks, psychology, and discipline you've learned aren't just theory, they're your toolkit. Apply them, stick to your plan, and watch your trades become intentional,
controlled, and profitable. And as we move into the final chapter, we'll talk about your trading transformation, how to embrace continuous learning, commit to self-growth, and make mastery of yourself the ultimate edge, not just in markets, but in life. You'll learn how to close the loop, turning all this insight into a lifelong trading mindset that propels you forward. So take a deep breath, anchor your strategies, and get ready to step into the final chapter where your transformation begins today.
Chapter 10. Your trading transformation begins today. Listen for the next 10 minutes, and you'll discover how to turn everything you've learned into a lifelong edge. Ever wondered why some traders seem unstoppable no matter how wild the market gets? The secret isn't charts, indicators, or luck. It's mastering themselves. If you're smart, you shouldn't be here. Yet, here you are. Let's fix that. Comment below. When was the last time you really committed to improving your trading mindset, not just your trades? Think about it. Most traders chase profits without committing to personal growth, and that's why they plateau. Here's the truth. Mastering your mind is the ultimate edge in trading and in life. All the strategies, principles, and psychological lessons we've discussed are tools, but the real power comes from committing to continuous growth, discipline, and self-awareness. That's what separates winners from everyone else. So, what does your trading transformation look like? First, it's about embracing consistency. Consistent practice, consistent journaling, consistent adherence to rules. Second, it's about humility. Admit when you're wrong. Learn from mistakes. Let feedback guide your growth instead of ego. Third, it's about vision. See yourself as a trader who acts intentionally, not reactively. See yourself as someone in control of their emotions, their decisions, and ultimately, their results. Let me tell you a story. Jesse Livermore didn't just become legendary because he picked trends. He became legendary because he constantly observed, learned, and refined his approach. He studied the market, his own reactions, and the psychology of other traders. That dedication to growth turned him into a market master. Here's a practical exercise. Commit to one habit today that reinforces your growth. Maybe it's journaling every trade, visualizing market scenarios, or reviewing your plan each morning. Do it daily. Consistency compounds over time, just like your capital. Another key principle: surround yourself with learning. Consume content, engage with communities, study market behavior, and reflect on your results. Growth isn't a one-time event, it's a journey, and the market rewards those who evolve. Ask yourself, are you treating trading as a hobby or as a craft to master? Most traders treat it like a game. Winners treat it like a profession. They invest in their mindset, not just their money. They understand that every lesson, every loss, every win is a stepping stone toward mastery. Here's a mindset shift for you. Focus on becoming better today than you were yesterday. Forget perfection. Forget needing to be right on every trade. Your edge comes from discipline, emotional control, and continuous improvement. Those who embrace this approach aren't just surviving, they're thriving. By the end of this chapter, I want you to walk away with this thought. Your trading transformation begins today. You have all the tools, all the knowledge, and all the strategies in this audiobook. Now it's up to you to take action, commit to growth, and make mastery your edge. So here's your challenge. Subscribe, engage, and immerse yourself in content that pushes you forward. Commit to self-growth daily. Apply what you've learned. Test it in the market. Reflect, refine, repeat. Master yourself, and the market will reward you. Remember that ultimate edge isn't in systems, indicators, or luck. It's in your mind. The calmer, more disciplined, and more self-aware you become, the sharper your edge becomes. Master yourself, and you master the market. Take a deep breath. Anchor yourself,
and step into your trading transformation. The journey doesn't end here. It begins today. You've made it to the finish line of this audiobook, but the start line of your mastery. Commit, execute, and grow. Your future as a disciplined, psychologically resilient trader starts right now.